Welcome to Reimagine 2021. I'm Yonah Hochhauser, and as always, I am welcome to be talking to Doug Leonard, CEO of HiFi. Used to be Mainframe, now HiFi. Doug, thanks so much for joining us.
You bet. Glad to be here, Rohan.
Well, first off, you want to give us a quick rundown of why you guys decided to change from Mainframe to HiFi?
Yeah, you bet. So Mainframe originally started out as something very different than what we are today. And so, that kind of captures the reason we wanted to switch. Most people, as soon as they feel like they understand what you are, they've either written you off or they've kind of like joined the community. And so in order to really position ourselves in the minds of our potential consumers and give ourselves a reconsideration, we needed a new brand, and we needed to kind of like, make people question like, wait, what is HiFi? And that way they can come and rediscover us and give us a chance in the DeFi space.
Very cool. All right. Well, HiFi, I like the name. I like the mustache. It's all going great for you guys so far. So, the whole point of the theme of this conference is kind of looking at the history of coins, kind of looking back to where we came from, so we kind of appreciate, the wild ride that we're currently on. So my first question to you is, how did you first hear about Bitcoin?
So Bitcoin, for myself personally, was back in, I believe it was 2012, 2013. And I was over at a friend's house, and they were talking about, I was visiting California, and they were talking about this new digital currency that, some of their friends had started using. And it caught my interest because I was studying hashing algorithms in school. And so essentially, as soon as I started understanding, kind of a very simple thesis on it, which was there's going to be a fixed supply in the future. You had a 4-year halving cycle, and that it was, backed by math. Those things all really spoke to me. And so I just took a simple thesis on it and said, hey, well, if this is a fixed supply, and if demand is going to grow in the future, then price likely is going to increase. And so my bet was that interest in this token would increase. And so I thrust myself into a mining operation, and I started learning everything I could. And I basically hit a point where the speculation got boring, and I needed to start building and doing something with blockchain because I started believing in it so much.
Mm-hmm. And what kind of role did you see it playing? I mean, besides, you mentioned, you saw the supply was going to be fixed, and you assumed the demand was going to go up. But what purpose did you see it playing? Would it be kind of just like, would it be actually the future of money? Would it be just an interesting concept to mess around with for tech geeks? I mean, you saw the speculative aspect, but what role did you see it playing originally?
So at the time, it really was just speculation. I saw it as something that was interesting. Internet money sounded cool. And I had spent enough time doing startups, even at that point in time, still in college, that I could see a place for it in the world. But I never imagined at the time that PayPal would be adding Bitcoin. Seeing as they froze my account for selling mining services on eBay, we have come a long, long way since then. And of course, my thesis has changed quite a bit. But at the time, it was very simple. It was just that more people in the future would be interested. I never could imagine, that we would be having conversations at the highest levels of government to like discuss this. Some people seeing it as a threat to national security. Some people seeing it as like, the future world currency, others seeing it more like, something akin to gold. So at the time, I didn't know really what I was touching, but just that it was novel. And, and so I a lot's changed since then.
For sure. Well, I'm assuming you read the white paper. You seem like a pretty tech savvy guy, and reviewed the white paper. And famously, the writer of that white paper was Satoshi Nakamoto.
Right.
And to this day, no one really publicly knows who he was, she was, they were. At the time, did it matter to you? Was that intriguing that, ooh, there's this person that I don't know who started this? And as time has progressed, do you even care? Are you still intrigued by the identity of Satoshi?
So my thesis around Satoshi has changed, but my interest in who Satoshi is has not changed. Meaning it's mattered very little to me who Satoshi is, and the reason why is because it makes it, you know, okay, so we find out who Satoshi is. Now everyone thinks that his life or their lives would be you know, at stake, but I tend to believe that, you know, we've got characters like Vitalik who are alive and who seem to be well protected, who don't have people coming after him because of just their enormous wealth. And so I imagine certainly he would be approached by lots of state agencies because the amount of influence he has, just like Linus, you know, from the Linux Foundation has been approached by several governments to try and help them for their purposes. So,
Yeah.
but in my mind, you know, I spend all day thinking about debt protocols, and quite honestly, if I wanted to see the conspiracy theorists out there, you'd only need a small group of people to use some of those first Bitcoins as collateral. And, you know, with the value appreciation we've seen over, you know, the last decade, it's an effective form of collateral, and he could live off of that quite easily, but it could be a private transaction between a group of friends. But even so, you know, if there was liquidation necessary, you know, you might just hand a private key over rather than actually moving those Bitcoins because of what it does to the market.
Right, for sure, for sure. Whoever he, she, let's say Satoshi, whoever, you know, a lot of these, I think the most fascinating thing for me is the inactivity. You know, we assume that certain wallets are controlled by Satoshi. They have not been used. And so at least the kind of fun speculation. I mean, you know, are they alive? Are they dead? Do they merely have these hands of steel that, you know, that they're not moving it, or like you said, is a bunch of smart solutions to them actually not visually, physically moving on the blockchain, but actually transacting off chain, or are they simply dead and that crypto is lost to the world? So I do think that makes for a really fascinating story, because if you look at the numbers, it's all estimations, but they would be essentially one of the wealthiest people in the world.
Yeah, it
So,
likely. Go ahead.
well, so I mean, I think what that naturally leads to is, can you see in the future kind of this treasure hunt taking place, where, you know, as computers become more sophisticated over time, can you see this kind of being this holy grail? You know, of people really trying to crack these addresses and kind of unlock this treasure.
So I definitely think so. If you look at like the type of hardware advances we've had in the last decade, it seems reasonable that potentially we discover something in the implementation of, you know, the SHA-256 hashing algorithm running on Windows machines during that time period, where people you know, are able to, you know, see where the randomness was generated and try to create you know, either the, you know, private keys or in some way claim those Bitcoin. And you know, if you've got a whole bunch of old Windows machines just sitting around, you know, why not? But I think you know, the mathematics around it are against you. But yeah, you definitely have to have a very intimate knowledge of the Windows architecture at the time, as well as the SHA-256 algorithm. So I think at this point, it's got to either be, you know, Satoshi is either dead if they're an individual, or it's an organization, which is, you know, a little bit easier to keep some checks and balances for, you know, this long a time for this much, you know, with that much value behind them.
For sure. All right, so it's changing gears a little bit, you know, because this is a very exciting time for crypto overall. You know, the markets are exploding, but also there's a lot of advancements in the technology. But it's still it's still intimidating, so intimidating for newcomers. You know,
Yes.
whether it be, you know, especially, you know, you're working with pretty complex financial instruments. But even this idea of crypto, you know, as the price really skyrockets like it is now, I get approached by all my friends and family who know that I work in crypto.
Yep.
Explain it to me. What does this mean? What should I buy? How does it work? What's the hardest, the toughest part about cryptocurrencies you find to explain to others?
Well, quite honestly, I always speak from my own experience. And my experience, even within the crypto community, is quite obscure. And so just trying to, you know, so for example, I've been onboarding lots of family, and I, you know, I choose to onboard them to the Argent wallet because it has social recovery. But it's extremely expensive to use right now. But when I'm sharing with them stories about what's going on and what's exciting, you know, I talk about taking, you know, about $200,000 of Mainframe's treasury and buying socks. And they're like, "What? Stocks or socks?" I said, "No, socks. Look at these socks. They're and when you pull up a picture of unisocks, they're so plain and so like it just leaves so much more to be desired for it." They're like, "Wait, what?" And I was just like, "Yeah, I made $1 million on socks this month." And that just like their response is just like, "Okay, yeah, I definitely don't get it, and I'm not going to get it. But yeah, can you be my guardian on Argent so that, you know, when I forget about this, that you can help me recover?" So it's, I mean, onboarding new users and how obscure everything about this space is, you know, I found it a lot easier to take this route. I say, "Hey, look, you know, crypto is quite volatile, but we have these stable coins that are pegged 1-to-1 with the US dollar, and for the most part are pretty good about holding that peg. If you'll take, you know, just some money from your savings account that you can afford to lose, and then go park it over here in Compound. They've got an insurance layer. They, you know, have variable rate interest that you can earn on it. And it's going to be orders of magnitude larger than what you're getting in your savings account. That works really well. And so I think because DeFi is such a part of this bull run, that we do have a narrative that can really speak to people in very simple terms, but it very quickly can become overwhelming and super obscure. But that's the exciting part for me. So they get both.
Right. Well, you know, it's funny because we kind of started this off, you know, what when you first heard of Bitcoin, what did you think it would be? And now that we're still relatively new, but it's still about 10 years in, a little more. And what's not even just for Bitcoin, but looking at the whole space, what is the most surprising use case that exists for crypto that you didn't even dream of when you first heard about this technology?
Well, I mean, it's part criticism for the space and the fact that we try to make crypto the solution for everything, but you know, when I mention crypto, there's a couple subsets. You've got blockchain itself, and then you've got you know, central bank digital currencies that are going to, you know, probably be grouped in with this umbrella term of crypto. You know, I think what's surprising to me is that people can be convinced that this large, clunky, inefficient database that's really good for these, you know, a very small subset of use cases can do everything. And I know, like, you know, if you think it's only going to solve a few problems, you know, you won't try and you won't innovate. But yeah, I'm surprised by the amount of dreaming that happens that seems unbased and sort of superfluous. And so, you know, maybe a classic example of this might be Dentacoin, or, you know, it's just this coin for dentists. And that's all I understand about it. So maybe I'm missing out on this like revolution that's happening. But yeah, I'm surprised by how much we put up with in this space for, you know, kind of baseless type creations.
For sure. I mean, And you know, it's kind of you know, it's so dynamic because it's so new, and so yet, you know, last time we spoke, you know, half these things didn't exist, and yet now they're just part of the vernacular. This is just how, of course, pancake swap. Who would know pancake swap? It's the only way to swap. What, I'm going to use Uniswap? You know, when a month ago or 2 months ago, it was like, what? Why would I use anything but Sushi Swap? So
yeah,
you know, it really it's such a high barrier just because it's just so dynamic, and there's just so much to keep up with. If you're not living and breathing it, even if someone explains it to you today, crypto, tomorrow they're already behind. They're already behind the curve. So if as a community, and even as businesses, I mean, you're running a business, it's not a charity. You know, as you know, businesses and enterprises in this space, you know, we keep on asking adoption and when we get people in, but we're facing this major problem, this wall of a barrier of entry. Really, what can we do, you know, as a community or as businesses in the space, to help lower that barrier?
So, I mean, there's kind of two things that I look at that are going to bring adoption. One is time. And I think that's the ultimate test. You know, when we look at even security of our own protocol, the only true guarantee is time. And so as we have more time and the number of incidents, you know, drops, we're going to see people trust it more. I would say we see a big DeFi exploit, you know, every, you know, 2 or 3 weeks, it would still seem. And I think that's because we're still in this experimental phase where people are allowed to not be careful, because a lot of us have made a lot of money in a very short period of time and are okay losing it. And we'll try new experiments and we'll try, you know, different things. And so I you know, I think time is going to be the biggest thing. And then second is use cases that speak to people who aren't living and breathing it every day. And I think, you know, with the lending protocols, with the DAI savings rate, you know, economic incentives are fantastically effective for driving value somewhere. And so with all these incentives, you know, I think we're in the golden age of DeFi where you get paid to be a consumer. And so I think we're going to keep, you know, seeing, but they only can move at a certain rate. And so I think you're going to see a lot more funds that raise capital and pursue market neutral positions for either volatility harvesting, leveraging tools like Pancake Swap or Uniswap, and are parking stablecoin in protocols that are paying them to park them in their protocol. And I think, you know, the last thing that we need to accelerate adoption is very easy to understand and accessible insurance, so that, you know, I can basically share with my dad or my grandfather and say, hey, park your money here and grab this insurance. No, we don't have FDIC, but what we do have is this layer of insurance that is going to cover you and is, you know, is as simple to understand as depositing into Compound is today.
Right. And I think that's really important. Like you mentioned, it's time. You know, every 2 to 3 weeks there's a DeFi hack, but we don't really hear so much major exchanges. If you go back 2, 3 years, it seemed like every 2, 3 weeks, major exchanges were hacked. And so insurance is very crucial. And if we're looking at the history of Bitcoin, Mt. Gox, the hacking of Mt. Gox was a crucial event. No insurance there. And that really like gave or put a big hit on the trustability at the time of Bitcoin. You know, it wasn't like it was today. And so it was still something new. And I think that really hurt Bitcoin. But luckily, like you said, time. And there's been enough time since Mt. Gox that all these newcomers don't even know what happened. So they're not worried about it. It doesn't exist. So if something like Mt. Gox happened today, a major top exchange or the biggest exchange holding cryptocurrencies went down, no money recovered, all lost, would crypto survive?
So this is interesting because, you know, the demographic of people holding crypto, specifically Bitcoin, is is very different than what we saw during Mt. Gox. So if it were a custodian like BitGo, that would send ripples through the whole industry in a very large way. And then we would really get to see, you know, the Lloyds of London and the insurance policy that they actually have purchased there, whether or not, you know, we really pay out, or if this is, you know, several year court battle. But given insurance, I imagine it's not going to be like, oh yeah, we gotcha, we'll just wire the money over real quick. And so I think if it were a large exchange, well, here's the truth. You know, crypto is all about decentralization, but at the end of the day, that decentralization extends only insofar as there is a majority of the people who have consensus. Now, while the miners represent some part of it, if there is a fork and one fork gives me my money back and the other doesn't, you know, we saw this play out in Ethereum and Ethereum Classic. And so I think we would see a lot of forks, and I think we would see how resilient we are, but it's going to be damaging to the larger protocols more so than the smaller ones, because the smaller teams that are nimble, I mean, we even have seen a recent hack from one of the major exchanges where the solution, and I must assume that it was pressure put on, you know, token teams that, yeah, just fork your protocol real quick. Don't honor those things. And then, you know, if they go into stablecoin, if they go to centralized stablecoin, USDC or Tether, both have demonstrated a willingness to freeze funds on behalf of protocols or exchanges. And so we have some tools. And I have to imagine that the big one that we would be watching is whether or not Bitcoin as a community chose to honor the exploit. Now, when you've got Elon Musk and you've got other, you know, Michael Saylor, these guys, you know, they're not keeping their Bitcoin on an exchange. And so those guys, they're going to be just fine. So yeah, it would be interesting to watch play out. That we would certainly see a big dip in the market as a whole. But I imagine we wouldn't take as long to recover because a major exchange being hacked does not change the fundamental thesis of any of these projects. And so smart money is going to flow back in and not keep it on the exchange.
And that, of course, that would be the hypothetical situation where, you know, due to a failure, that would be endangering, you know, these protocols. But on the flip end, it seems like certain protocols, especially Ethereum, are really endangering the future by their success. The network cannot keep up with the demand. I mean, trying to do any trade or transaction on Ethereum today, unless you're doing it at a big scale, that you don't care about the fees, for the everyday trader like me, it's unusable. It's unusable. And so that's why we're seeing a lot of success with Ethereum competitors. Binance has done BSV has done a major jump recently with the PancakeSwap and all these things. So if we look back to that original you know, view, you know, Ethereum white paper, we're going to be the world computer, you know, kind of smart contracts, all these amazing promises. As of today, with ETH 2.0, it's not out there yet. I mean, we're hearing about it, the beacon chain's there, all that, but it's not active. So looking back and judging just the white papers, Bitcoin white paper versus Ethereum white paper, which project would you say better fulfilled their vision up until now?
Quite honestly, I believe it's Ethereum, because your vision always changes. And so, you know, the Bitcoin white paper, you know, shouldn't be seen as a tablet carved, you know, Moses' 10 commandments carved into stone, that these things are immutable. I think, you know, any product, any offering has to adapt to what the users demand it to be. And so I think, Disney is a really great example of that, from theme parks to streaming, they've adapted and it saved the company by being what people have needed it to be. Bitcoin, I think, for the most part, is very contentious, and it's something that drives away a lot of people from participating in the community. I personally see the community aspect of Ethereum as something to its advantage, where it's able to be nimble and adapt and be quick. Now, of course, something like Binance Smart Chain, because it's more centralized, it's going to be able to be even more nimble, because they only have to get 21 nodes to agree on what to do and what to upgrade and what the parameters are going to be. But quite honestly, there is a spectrum of care when it comes to decentralization. And something I feel that we learned at Mainframe from our own failures is that the number one thing people care about is not decentralization. And that's very unpopular to have that opinion. But I think our experience has really taught us this. Now, that doesn't mean that you abandon decentralization as a whole, but it means that if you're going to be in touch with the money that's being parked in your protocol, they might care about your ability to move and be nimble and adapt to changing circumstances greater than they care about totally decentralized and uncensorable. And you look at, most, optimism is a really good example of this, where, they're very iterative, and so like things are going to change as they get, this closed feedback loop. You see, MakerDAO in their white paper, it is a phased introduction to decentralization, because, at the beginning, we need dictator Rune to just call the shots and say, this is where we're going. This is V1 of our product, and it's single collateral DAI. And so suck it up. And if you don't like using ETH as collateral, well, this product isn't for you today. And then, now that we have multi-collateral DAI, we've got much more of a community governing it. And I think that's a really great pattern for every project to follow, is that you need very clear direction in the beginning. And then once you've found your product market fit, the market can be the guide. And so being so rigid in what you are will date you. And I expect it's going to hinder you. Now, whether or not there's a flippening, whether or not, like, I think Bitcoin is the greatest brand in all of cryptocurrency, because, my parents think that, blockchain is Bitcoin. Like, there is no difference. And while it is the Genesis chain, blockchain is going to do way more than Bitcoin will ever accomplish, over the next 30 years.
Wow. Okay. Well, I mean, I think anyone who's on the inside, can see the value that Bitcoin has, but also its limitations. Clearly limited in terms of what you can build upon it and the application. But I think you do make an important point there, that to the majority of the world, we're a small bubble. The majority of the world, Bitcoin is crypto. Bitcoin is blockchain, and that's the and that end of the day, that is what exists now. And there is no real branding. It's not like, with Apple, where they have a whole marketing department that tries to sell a story. These are decentralized, some more than others, but these are decentralized protocols where there really is no one to really market it for them. And so it's up to companies like yourself and others around to really shape that narrative. And you guys aren't really built off Bitcoin, Bitcoin network. You right. guys, I believe, are on Ethereum.
Correct.
So, I mean, do you feel it's even relevant? It matters. It's worthwhile to even market and brand yourselves and brand Ethereum. Or the customer doesn't care. They just care about the end product. They don't care the protocol it's built upon.
Well, here's the truth. Mainframe and now HiFi has a very colored history where, we have delivered 2 products already, and people gave us millions of dollars to deliver these products, telling us, hey, we want, decentralized, unstoppable chat to the order that we are going to give you $13+ million. And then when we gave it to them, they didn't want it. What they wanted was they wanted the price of our token to go up. And so this is a very difficult customer / investor to develop for. If the price goes down, you're a scammer. If the price goes up, well, it doesn't matter what you built, you did it right. You did it right. And the nice thing is that if you built something useful that does get product market fit, the expectation is that you will see adoption, and you have a value capture mechanism that you can use to drive value back to your governance token or your community. You know, you can kind of like point the fire hose of value back to certain groups that you want to reward. And so when I look at, like, you know, what we've been through, I think Mainframe will go wherever our consumers demand we go. And that's been our promise, you know, since I took over. It was that, look, if fixed rate lending on Ethereum isn't doing it and we don't have product market fit, we're gonna find, you know, something else that is. If that means that we need to, you know, jump over to a different chain, we're open to it, because we are not so naive to think that we perfectly can, you know, see into the future and anticipate every move. But what we are is we're very sincere in our effort in driving value back to our users and customers and people who have taken a bet on us. And so we won't stop until we found it. And so if by chance that this fixed rate lending play doesn't work, I've got like 4 more ideas that we're gonna go after. And I am not married to any chain. You know, I would consider building on Bitcoin. I think Abra did an excellent job creating synthetic exposure on the Bitcoin blockchain. I would be open to other chains, because at the end of the day, I personally feel fulfilled when there are people who use and consume the code that we've, you know, written and built. And so my #1 loyalty is to the users, because they're ultimately the ones who are paying for the service, and that's who we want to be aligned with. And very little else matters, but we can't jump to every shiny new thing, because it's completely unwise, and we would never cross the finish line. We would never launch into our beta. And so you have to be very calculated about when you do, you know, make a trade-off.
And of course, you know, right now the Ethereum network is essentially choked. You know, for any small time transaction. I mean, the transaction fees are so high. But you know, talking about HiFi, Mainframe now HiFi. Check them out. Fixed rate lending. We spoke last time, or I believe 2 times ago, about the importance of fixed rate lending in the crypto space. Right now, I see you're only able to lend USDC. Is that going to be? Is that just at launch, or is that going to be the only coin available for lending?
That would be a very, very disappointing offering if we were to stop there, in my opinion. So in choosing, you know, we are launching into our public beta. I think a lot of people who are kind of only paying attention ancillarily, you know, see that we're on mainnet, and they might want it to be the full deal. But, you know, if I can use MakerDAO as kind of, you know, something that we're patterning after, is that, you know, they had single collateral DAI before they launched into multi-collateral DAI, into the, you know, DAI that we really know and use today. And this is, you know, effectively, if you take a step back, we have, you know, approximately $250,000 of value. You know, we're 3 days into being on mainnet. A lot of that is Mainframe's money, or HiFi's money. And the idea here is there's $250,000 that if you can go and break my protocol, it's yours. You know, unless I can find you and somehow press charges and get my money back. But quite honestly, I'll trade you some socks for the money back, and, we can, you know, both have a trophy. But I think that, this is the right approach to take whenever, we've got auditors, we've got incredibly talented engineers, we've reviewed the code, but you don't know what you don't know. And I hope people walk away from, from our experience with the public beta and understand that, like, look, I'm not in any rush to lose anybody's money. If anything, it's the opposite, and I really want to protect it. And so you have to act differently. And we don't see that from a lot of DeFi protocols. You see, Andre, who's shipping, just this, conductor of different protocols, who gets to be kind of the Pied Piper of, a segment of DeFi. And every day his Twitter feed announces a new product, a new interface, a new experiment, a new whatever. We just aren't playing that game, because we would likely like to be one of the infrastructure pieces that Andre leverages if he needs a fixed rate lending integration. Mm-hmm. But we're not going to be the ones who are, every day trying a totally new experiment. Now, there's a spectrum, and we would like to experiment more, and you're going to see a lot more of us pushing the limits of what can be considered collateral and what can, what really is money. Hopefully in the next 12 months from HiFi. But, we've got a bug bounty out there. And if I'm going to lose money, I want to minimize that. And so we haven't turned on any incentives. We're not trying to create, we're not a flash in the pan. Mainframe and HiFi is in a better position today than when I stepped into office, because of the attention and because of the approach, because the value and the token is appreciated. Our treasury, in terms of probabilities, we have a higher probability of success now, just because we've got far more resources. And I think I'd like to say that that's in part because, we announced, back when Mick was still running the company, he published the first fixed rate lending white paper. I reworked it when I came in. And it's well over a year since that original publication, and that's an eternity in crypto. And so, but in taking our time, I hope we're building something that's lasting, and I hope we're building something that people can have confidence in terms of the security and assurance that if there is any sort of exploit, at least it wasn't for lack of trying, a lack for economic consideration, lack of engineering talent or engaging with auditors. And so, yeah, right now, we just put a whole bunch of money on the blockchain. And if you can break it, by golly, go get it. And if you tell me who you are, I'll give you a pair of socks. And which it might be worth more than what you actually get at the end of the day. But yeah, it's you've got to phase into these things, and this is actually all I intend to launch with the public beta is one single collateral, one single target asset type. And it helps build out the infrastructure pieces for the liquidation bots to make sure there's more than just HiFi running a bot, 24/7, making sure that the protocol doesn't become under collateralized. And in the background, the team is working on the next iteration, which is going to have, a lot more bells and whistles for people. But this is just enough. We've had, lots of very large investors put in a lot of money and bet on HiFi. And this is an opportunity for them to send their minions in to dig through the code and see how beautiful it is, and to reassert their confidence, maybe double down if they're really feeling confident, or readjust if they're not impressed by the type of quality we're shipping. But man, if you look at that code, I mean, I can't speak enough for Paul and the team, and just like it just has such a beautiful rhythm and cadence to it that you can tell it's been very well thought through. Multiple iterations of the architecture, were considered. And so it, I think people should feel confidence. This is our time to show that we can ship, and but it's not the time for us to ape in and drop $100,000 into our lending protocol, because we have intentionally limited it such that just doesn't make economical sense.
Mm-hmm. Some people say that they could listen to Morgan Friedman talk about anything. He has such a soothing and a voice and way of talking about things. I think coding is one topic he couldn't, but you wax poetically so poetically about code. It's enjoyable even to hear you speak about code. So, Doug, I love your outlook and I love your perspective on these things. And it's such a pleasure to speak to you. But you know, I do think that you're even selling. By my question of, oh, you know, only USDC at the beginning, I'm not even you know, it comes off as a criticism because in this space everything is so, you know, bells and whistles and let me offer every coin, and I understand that, but yeah, I think there's even that use case of a fixed rate lending for USDC is there's a missing target audience there, which is right now in the world, in the traditional finance, the returns you're getting on just your money, your dollars, just sitting in the bank is nothing. You're getting nothing. The interest rates are some, in some places of the world are negative. So do you feel that, you know, it's ready now with all the hype and all the public awareness of crypto today? Do you think that there actually is a market where if you went to consumers, mainstream, traditional consumers who don't really know crypto, you say, this dollar bill that's sitting in your bank, and it's not even a bill, this digital dollar that's sitting in your bank, if you kept it in our bank, you'd be getting way higher returns and doing the same thing. No fancy trickery, no magic, no swapping, no yield farming, no nothing. It's the same mechanism, because when people don't realize when they put their dollars in the bank's lending out those dollars, that's where interest comes from. We're doing the same thing here at HiFi. Do you think the market, the traditional market, is ready for that?
Honestly, yeah. The traditional market is, I mean, I hear it, you know, every couple of days when I'm onboarding someone into it, you know, oh, well, you know, my grandpa talked about, yeah, well, I've got 50K parked in this high interest savings account and it's earning me 2%. And honestly, I dull down the returns that I'm seeing because it scares people away. You know, last week in Compound, I was netting 17%, you know, APY. Wow. We like, and they've got an insurance layer. When you look at like the FDIC, it insures you from funny business from the guys on the inside, and the regulation's supposed to protect us. But guess what? Whenever I can see, and in Mainframe's case, when you go dig through our repository, when you dig through our smart contracts on Etherscan, you can have a much higher degree of assurance of our inability to do any sort of funny business than, and so the idea that FDIC needs to be there, you know, starts to become a mute point. And so, you know, I think there will be a tipping point. I don't know if it's going to be this bull run or next. And I think we've got, you know, so Mick he moved on from Mainframe and HiFi, and he still sits on our board, but he's gone off and he's building a neobank called Genesis Block. So, you know, genesisblock.com, these guys, they're doing exactly that, where like, you know, I have the beta version of their app on my phone, and I can deposit Bitcoin, USDC, I can wire money in, I can ACH in, I can take it off my Apple Pay and put it in, and they're giving me DeFi interest rates. Now, at this, you know, in this version of the app, it doesn't come with insurance, but you better believe that, you know, him and I are working on finding an at-scale solution that can give his consumers the ability to similar protections that the FDIC offers. And so, yeah, we're going to see it very shortly, where like onboarding your dad into Compound, onboarding your family into, you know, these other things is as easy as signing up for PayPal, as easy as signing up for cash. And it's going to be through a tool like Genesis Block, because turns out people really like making money. And if you make it easy for them, it's going to happen. And so there's some regulatory hurdles. There's, you know, certain states like Texas don't allow for it as much, at least in the United States. But by and far, we're going to see it. And as soon as you see the first one, you know, there's going to be 4 or 5 more, and it's off to the races. And I expect that there's probably going to be some pretty big acquisition plays as soon as somebody's already there.
Yeah, well, get ready for Sushi Bank, Unibank, Pancake Bank. But I think you're exactly right. And you know, tying into that, you know, now that the technology is available, and people, they might not realize it yet, but people now have access to these incredible financial instruments and tools that they never had in the history of the world. and you combine that with, and we're starting to see, you know, already from this last month at this point, maybe a couple weeks ago, the whole GameStop, Wall Street bets, propping up GameStop, and kind of these meme bets.
Mm-hmm.
Kind of, you know, the people, the retail investors are kind of bubbling under the surface, and they have been for a while. Are we going to see an explosion? I mean, we saw it a little bit with GameStop, but you know, now that people are, especially with cryptocurrencies, people are getting the tools to actually make a difference. You know, they no longer have to deal with just what's offered with them, the middleman, the bank. Are the institutions, you know, like you said, the
Mm-hmm.
banks and these things, are they starting to really worry about retail investors?
No, I don't think so. In my mind, so let's look at, you know, so if it's crypto that's threatening the banks, you know, this is just not the way the world works. So what's going, so here's what plays out. You know, JP Morgan, you know, these guys, they're not going away. Yeah, they're sleeping on this, but guess what? They've got money, and the federal government at this point is basically letting them lend money for free or near free. And so when they see that they're behind in any capacity, one, they've got to wait for regulation to catch up. And so, you know, before JP Morgan does anything in this space, they're going to make sure that the risks are already, you know, defined, and that they're covered. And, you know, they're very predictable and they're slow moving. But at the end of the day, they're going to be the ones who are buying Genesis Block. They're the ones that are going to be buying BitGo, the custodians. They're the ones that are going to end up, you know, I'm waiting to see a non-crypto entity acquire a crypto entity. You know, we've seen Binance acquire some crypto projects. From what I understand, the deals on those the terms on those deals are not, you know, incredible. But I think what will happen is the banks will buy, you know, Genesis Block. The banks will buy, you know, Compound, and the idea is that, you know, the banks are very influential, and we hate them and we vilify them until they're writing us a check, and it's going to allow us to further the ideals and, you know, help us go build other blockchains and innovate and set up a university. You know, Robert Leshner becomes a billionaire. You know, I bet you the guy creates an educational institution that promotes the fundamentals that he would like. And, you know, maybe it's because JP Morgan bought Compound. Now, can you really buy a protocol? Absolutely. The only, like, all they've got to do is acquire more comp than everybody else. And there's already large players like, you know, Paradigm. You've got these large funds, Multicoin. You know, that's where an acquisition comes, and you're buying influence. And so these guys got in early. You know, there's, you know, several large players in Mainframe, and if you wanted to have influence over Mainframe, oh, well, you just, you know, acquire Multicoin. You acquire, you know, some of these other firms who have, you know, large positions in HiFi, and then you can vote and also protect, you know, your customers, and make sure that their concerns are taken care of, and that nothing in the protocol changes such that it's going to hurt your business model. So they'll buy influence, and we will happily sell them our bags because we're excited to innovate on other layers. And, you know, we'll have regulation that will, you know, ensure that, you know, they can't just take it and do whatever they please, but it's within certain scopes that they can, you know, exercise their influence.
Wow. Well, I mean, listen, at the end of the day, I think you're right. I think you're right. And we haven't seen, I think anyone who's saying that the big institutions are scared of crypto are just forgetting history. I mean, the people who have the power, you know, once they start being threatened, they're just going to buy up the competitors. I mean, you know, there's no reason not to. You know, at the end of the day, money talks, money walks, and that's what be. But luckily, I think that, I think that will eventually even be good for the overall space. And someone who's going to really help make that happen is people like you, Doug. You know, you're creating good products and you're not rushing them. And that's something I always appreciate. Like you mentioned, you know, you put it out there, you say it like it is. This is my product. Go break it if you can. And you're doing that not because you want your money stolen, but you're doing that because you want your work tested. You want to make sure that what you build is true, is work, is quality. So Doug, as always, a pleasure speaking to you, letting our viewers know what's really going on behind the scenes. Tell it like it is, hold nothing back. Doug Leonard, don't ever change. Don't shave the mustache off either. The only thing that changes is Mainframe changes the hi-fi. Same great quality people. Thank you so much, Doug, for taking the time. And for all of our viewers here at Reimagine 2021, I'm Yonah Hochhauser. Thanks for watching.
Thank you.